Today is Monday, August the 12th, and the news was dominated by the protests in Hong Kong. All the flights were shut down there, so they're expecting a big crackdown to come from the Chinese government. That'll destabilize economies for a while. And also just generally tariff talks, trade talks, stupid things coming out of the White House. We can look forward to a lot of confusion. What we saw on relatively good volume was the Dow dropping right from the open. The NASDAQ started dropping around 1 o'clock, and the S&P 500 dropped from the open. This is a sentiment indicator that people who look at FinViz register if they are bullish or bearish. Probably not very statistically, it is not statistically significant. The advancers trailed the decliners by 70% to 30%, so that is going to take the market breadth down. Now let's just look at this move from here down below the edge of the oversold, and we came back up and we didn't even hit the neutral zero line. But look, in previous times when we dropped below this dashed line, we always moved up to the zero line and occasionally further. Here we moved up to the zero line and we came back down. Here we moved up to the zero line and we came back down. Here we moved up to the zero line and we kept moving an equal distance away from the zero line that we had hit on the downside, from really oversold to really overbought. And this oversold coincided with that value in the NYSE. This one moved back up to the zero line and then continued onwards. This one moved almost up to the zero line. So this one back in September is reminiscent of what we're seeing now. And in September, momentum continued down below, but not as low as the previous low, but then below the oversold line. So let's watch that. Let's compare this movement in the future to what's happening right now. Let's look at some charts. The S&P 2883, and remember when I said that once you're in the cloud, you sort of drift in the cloud and you can't see the top and you can't see the bottom. It's just like an airplane flying in the clouds. Well, we spent 2 days out of the clouds, but now we're back in again. So the idea of drifting in the clouds, and with the cloud particularly widening here, we could expect to come down and touch the bottom of the cloud and just bounce along inside the cloud until we can find some news to pull us out. Now this is the left shoulder, the head, and the right shoulder, and this is the trend line of the neck, and we didn't even get a chance to test that neck today. We just dropped. Let's keep an eye on it, but I think that we are going nowhere for a while. We did hit 50% retracement of this little down wave, but it's just a little down wave. It's the last one we saw in May. The whole month of May was a down month, and where August is looking like it could also be a down month. Well, we've hit 50% retrace of that May down motion. Let's take a look at a different Fibonacci, and let's take this high down to this low. And where are we now? Whoops, let me correct that. Let's just take this and drag it over. And where are we? We are not at the 61.8%. We bounced off it last week. We could come down, we could very well come down further. Apple down 79 cents. It had sort of a mixed day. It was up while the market was down. Finished in the gap. Was not able to fill the gap here on Thursday, but finished to sit on the 50-day simple moving average. Wouldn't be unexpected to see it go down to the bottom of the gap. But the 50 could very well provide support for Apple here. No need to take any action. Caterpillar, sick little puppy. definitely hurting. If China's not buying anything American, that's just deadly for John Deere and for Caterpillar. We will go down and test the top of this cloud. I have a feeling, I tweeted that. That's also just below the 50% Fibonacci. So there's that price gap right there of July 2017. We tested it several times back here at the end of the year in October and bounced off it. There's no reason to think that we won't go down to 111.87. So if you've got stock, you can sell some calls. I sold 120 end of August calls today. Still holding on to the stock. I did buy GDX. We're still in this chattering formation like we were here, but look at the pop that we had the last time this happened. If Trump wants to weaken the US dollar, we're going to see gold continue its move, and it'll be reflected in the gold miners. So I dipped in today with just 300 shares. I'd like to get up to 1,000 shares once I see additional motion in the right direction. Banks had a bad day today. WDC finished at the top end of its range, just below the 8 EMA, and Whirlpool finished just below the 200. So Whirlpool is a China tariff sensitive stock. So this is not unusual to see this kind of a pullback. And I still have half of my stock with some short calls that are 130s that I rolled from last week to this week. So I'm just going to keep rolling those 130s as long as this is in a down motion. And we touched on, let's see, did we touch 50% today? No, we did not. That's where we could be headed tomorrow, 133.25. So it just looks like it's not a good time for the market. It's August. A lot of people, a lot of traders are on vacation. June and July were pretty robust months, active. So I wouldn't expect too much for the next 2 weeks, especially with uncertainty coming out of the White House.